Okay, so we have already seen it was not because of PG or 3M or any other stock that made the move. It was the future that made the stocks go lower. Okay, just it's obvious. Okay, the futures are the big market, not an individual stock, because when the futures goes up or down, the computers, they have all kinds of programs. They will sell or buy stocks all around the index to match that difference. So if they want to sell something according to the futures, they will sell it altogether, from a bunch. Like for example, on the Dow, they will sell the 30 stocks of the Dow just in one click. Okay, it was the futures, not the stocks that made the market go down. So, and what made the futures go down? And also, it was not a bogus order or a fat finger, because the volume is normal, a little bit higher, of course, but normal for these days. If you see here, for example, the volume, this is the NICE, the S&P 500. The volume on that day, it was here, you can see it right here, was around 10 billion shares. You can see it in the days of the house bubble bust. You made days around that number, and it was not a crash day. Okay, so this is not because of extreme and one extreme volume order or extreme volume without having buyers. This was a pure and simple manipulation with several factors that had it for the big drop. The first and the most important factor was the talk about the riots in Greece and all that mumbo jumbo about the Greece not being able to pay and blah 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 blah, and that Greece would default. Okay, so if you check the news about Greece was downgraded on the 23rd of April by Standard & Poor's to junk. That was over a week before. Okay, so this is not nothing new. 27th of April, it was downgraded. On the 4th of May, 2 days before, Greek bailout is already not enough and protesters have taken over the Acropolis. I think this means a riot or something similar. This was 2 days, okay? And there wasn't any kind of talk like in this particular day, in the 6th of May. This was, they began talking about Greece and the problems on the street. Okay, let's see it then. The riots, you can see the news of the riots right here. They were at, you see this is the live from CNBC. So this is already the riots, and if you can see it right here, it's not even 300 points. This does not justify 1,000 points. And also by this time, the market, as you can see, S&P financials, their biggest one-day drop in 6 months already at this hour. Okay, this was around this area right here, because the market did not drop 10% straight up. Okay, and the market went one wave, two waves, and three waves. Okay, it dropped like vertically here, and it was not in 1 minute or 10 seconds or in 1 hour. It was in several minutes, around 10 minutes to be exact. So this was what happened. Okay, but at this time the market was already down more than 500 points. Okay, the rest is manipulation, and it's capitulation also, because only here, if you see here, the buy programs started kicking in. Okay, and if you see the volume right here, the volume is not much actually. So the volume to the way down is not big. It's not like 3 times bigger than the previous volume. No, it's only a little bit. Okay, like here or here, it's not. So it's not 3 times or 5 times. That would mean a big order coming through, but it's not. Okay, so this was just they began starting talking about Greece and blah blah blah, and then starting more about Greece, and then showing news about Greece and the riots that already happened days before, but it was on TV, in this case CNBC, and then you have you know, a glitch, like they say that happened, a glitch, a trade glitch, and there was no support for some stocks that made also news, because you have to, it was not the lack of volume on the whole market, it was the news that the Dow component was dropping 40%. That makes fear to people, and that makes people sell at the best. Okay, because the ones who sold here in the flash drop of 6 minutes were people who were on people that were on they were on margin calls. Okay, or the his broker closed the positions automatically because it over past the margin that he had, and a lot of hedge funds lost more than 20% that day. They were the ones who lost here. Okay, and this was only due to manipulation, nothing else. No fat finger, no Greece, because all the symptoms and all the news about Greece was already out. This was media, also some help with some technical glitch to fuel more fear, because some stocks were dropping like rock, and then you have this decapitulation, and of course then every big fish start buying around the 10,000 in the Dow, and they made a lot of money. 10% in the market is around $4 to $5 trillion. Okay, Greece debt is nothing compared to that. If you see one as one very interesting site, the US debt clock.org, you can see the real-time US national debt, and in here they have the world debt also, and guess what? Japan has 200%, much more than Greece, and Italy 120%, and UK 80%. You don't never heard about UK, did you? And Germany 80%. So of course Greece was in the news because Japan cannot be talked about, because if Japan fails, the US fails, because Japan is the biggest buyer. Actually it was overrun by China, the biggest buyer of US debt. So this is one of the cases that the manipulation made a lot of money to some very big sharks, because this was not something real that happened. Okay, this was made to happen like this. And one thing very important, if there's not one news that you think it will kill a company or kill the market or the end of the world or something, if it's not that, usually buy when there's a big huge flash drop like this. Buy. Okay, like Rothschild said, and there's blood on the street, buy property. Okay, and also one very interesting thing that I would like you to think about it. They have cancelled a lot of trades on PG, 3M, and all that. But if they said it was the stocks that made the index go lower and the futures, what about those people who sold the futures here? Because the future was not touched. Here they did not cancel any trades. So if the stocks made the index go lower and the trades on those stocks were erroneous, then the futures are erroneous. You should cancel the trades there too, but they didn't, because the only reason the PG and 3M happened was for the purpose of putting more fear to people. Okay, and also think about the system that there's in the US market, that you have several providers and they can work in a different way. Okay, so one player can stop trading and the other players, even if they are not with enough volume to satisfy, they will not stop. They will go to zero. So think about that. Be careful for the next time this happens. Take advantage and buy in the when everyone is selling, you should buy. That's the big trading rule. When everybody is selling, you should buy. When everybody is buying, you should sell. Okay. Hope you enjoyed it.